Welcome back to another interview, and this time we have Maj Soueidan here from Geo Investing. It's nice to have you on here, and can you just introduce yourself to the audience, talk a little bit about yourself, who you are, what you do, so.
Sure, and thanks, Lucas, for having me on. It's been a pleasure talking to you off air too. And
Yeah,
I don't want to bore you to death, so I'm not going to take you through the whole journey. But
yeah,
it's yeah, like I'm a microcap investor. Really, I'll invest in anything from zero market cap
yeah.
to 4 billion, really. But I spent a lot of my time under 50 million market cap,
Mhm.
and I'm looking for, I'm going to give you like who I am first, like the strategy I use just to get
Yeah.
that going there, so you put everything else in context before I talk about anything else I do.
Mm.
I really got really into investing. My dad gave me a book, Peter Lynch, Went Up on Wall Street. Really loved it.
Yeah,
Fell
great
in love with
book,
it.
great book.
Great book, man. And I don't realize how much of that book that I use today. I mean, I was thinking about this, and time goes by, and
Mm.
you're like, well, okay, I wonder. And now I'm doing a little more writing for Substack and
Yeah,
Geo Investing. I started and writing more, like doing more journaling, which I should have done a long time ago. And I started to realize, wow, this is a lot of things I'm doing now are the result of what I read in that book. So it's kind of cool that it stuck with me, and it really Peter Lynch's book. When you look at the way I invest and the way we run Geo and
mm.
the Substack, uh, Microcap investing, Cliff Notes, you'll see that you can see that. All right, well, there's a lot of kind of Peter Lynch influence in that. We
Mm.
cover a lot of stocks. Peter Lynch used to own thousands of stocks, right?
Yeah, yeah.
Um,
I mean,
we have a
it
multi.
takes searching to find good ones, right? I mean, you need a
Yeah, you have to turn
database
over.
of hundreds, thousands of companies. It's not easy.
And I love it.
Yeah.
Some things I'm glad we don't have. I'm glad that the universe is really big to hunt from.
Mm.
I'm usually mainly doing a North America, U.S. and Canada. Um, it wasn't until a few years ago that maybe 10 years ago I started getting into Canada.
Mm.
And Paul from Small Cap Discovery is really the
Yeah.
Canada guy. So if you want Canada, that's where you go
Yeah.
to.
Exactly.
But we try and apply some of our principles to Canadian companies also. Another thing is, and I don't know if Mr. Peter would have invested in Canadian companies, but I'm sure he did. And then you look at the strategies we use. It's everywhere from momentum, GARP, contrarian,
Yeah.
deep value, and no value but going to have value one day. Value traps, which makes investing exciting. Special
So you like the
situation.
versatility of all the approaches of what's all out there. You don't constrain yourself to one thing is what I'm trying to get at.
Correct. Yeah, and I think like when you look at life in general, and you look at what you're really good at. If everybody would do that, like take a step back, and if you had a choice of doing what makes you money, if that's your goal in life, right? I mean, chase money, but at what cost? Or you could just do what you love doing and have
Mm.
fun with that, and that would be the first kind of priority there. If you have that opportunity, which I did, luckily, um, it just worked great for me because I didn't. When I got into investing, it wasn't to make money. It wasn't like I want to make money. I
Mm.
just loved doing it, and it's very cliche. I mean, if you are good at something, and you keep excel at it, it should be hopefully successful. Doesn't mean you can go do anything in life. I
Yeah.
mean, I don't believe any.
Yeah.
I believe like you can get better in lots of things in life,
Yeah.
right? But what you can excel at to make really living at it and enjoy it
Mm.
is a whole different ball game.
Yeah, I mean,
I'll never.
I also, sorry to interrupt you. I also sort of talked about this previously in my podcast as well. That at least from my perspective, at least in the market that you're active, that I'm active, it takes a lot of passion really to stay in that. Like if it was only for the money, you would probably be out after the first big upswing, right? After the first bull run ended and bloods are on the blood is on the street and everything, right?
Yeah. I mean, try coming back. I mean, when I came into, which was ironic, when I got into investing in the late '80s, um, mid to late '80s, and then all through college, and then really, like, so I graduated from college. was it 92 maybe? And I believe at that time there was like a small recession going on.
Mm.
And I think Peter Lynch was actually getting out then, by the way, because he had a 13-year run. That's when he kind of got out of it. And I didn't really pay attention to it at the time. I didn't really know, look at macro. I didn't have like this background in investing. I mean, I went to college, very confused, and read the book in my maybe second year or maybe a year and a half into college. And my dad didn't know I was going to be, want to choose investing as a career. Mm-hmm. I'm half Lebanese. I'm 3/4 Lebanese, 1/4 Spanish. Mm-hmm. Lebanese doctors, engineers, architects. It's like really good things for the world.
Yeah,
not an investor who's going to ruin the world. Financial crisis.
Yeah. Those damn investors.
Yeah. So and when I remember being in college and just going through the motions, and I wasn't a great student in high school, and I was lucky to be able to get into college. There was a little line of relatives that I had gone there before me, so which made put a good word in for me. Yeah, hard worker at least. So basically, I was going through the motions, doing decent, but really not enjoying a lot of what I was doing. And when my dad gave me that book, I was like, "Wow, I'm hooked. How do I make this work here?" So I knew I wanted to be in finance or stocks. I call it finance major, but really I wanted to be in a stock, stockbroker. And I was the first inkling I'll be a stockbroker. You're watching Wall Street was going on then. Great movie. But so I'm in college taking these finance courses. I was a dual major. I took finance and risk management. Just fancy. Right out to do all these things.
Cap and woohoo, let's go.
Stock picker, get all fancy stuff. And it wasn't that to me. It was I still wasn't getting the stock picking experience. So I came.
Yeah, I have the same experience right now in my going to the university. Right? Yeah. I'm doing bachelor's for business administration.
And I think that I remember going my first class. It had remember I'm here, so no finance, no real stock picking experience, no really financial experience in the world. It's all foreign to me. And even though I had been around my dad, all I knew about business was my dad ran his own company, right? So I saw him do that. He was an entrepreneur, and I saw him investing. So that was what was okay. Running a small business and investing, that was my kind of version of what does it all look like. And so I'm like, all right, where's the stock picking here? So this isn't working. And I read Peter Lynch's book. I mean, okay, well, he's saying it's really possible for these multi-baggers make all this money in the stocks. And then I remember
he's saying it's easy in a way as well.
It's easy, right? Yeah. So I was the classic guy in college, drinking. After I read his book, drinking Hansen natural beverage, which is Monster today.
Oh.
Drinking that. Oh, okay. Oh, it's got stock. Let me go look at it. And years later, I actually bought it when they just introduced their beverage. The symbol back then was.
And that's applying what Peter Lynch is saying as well, right?
Of course, yeah. I didn't keep it that long. I did a quick double line, got out, and then I missed. That could have been my life. I could have been it. I could have been done.
Yeah, you could.
But silly me. No crystal ball. But so while I'm in there, in college, and I had taken a portfolio management class and an investment class, and the portfolio management class, I walk in the teacher looked very angry. He didn't look. He looked very unsatisfied with everything. That was if he had a shirt on he was wearing a shirt. He would have said unsatisfied. That's how I viewed him. And the first thing he really said was the typical thing: you're all going to fail this class, or maybe 10% of you won't. You can't beat the market. You can you go past 12 sufficient. All these things. I'm like, wow. This is not looking good.
Academics.
That really gave me encouragement. I didn't really, and it's a lot of statistics and portfolio management theory, and I wasn't really. I was listening to it, but wasn't grasping a lot of it. I understood the concept of it and what it really meant in theory. And then I had an investment course, which that was a little better, teaching me um, more about balance sheets, income statements, these kind of things, and DCFs, which I don't
Mm.
use much of that, by the way, today. But I was starting to see some other side of it. Okay, but so I just, I'm not getting what I want, so I started spending a lot of time in the library reading the value line, which I recommend to any young investor getting involved in stocks. Get your whole subscribe to the value line, and you can do it online. In the U.S., you can go to a lot of libraries,
Mm-hmm.
especially college libraries will have the value line there. And the value line is it's a publication. At least at that time when I used to use it, they used to come out with reports every quarter, cover about 2,500 stocks maybe. They don't really go into now
It's
cap
like
Microcap.
ringing a bell to me, but I'm not 100% sure.
It's and I'll show you. It's in Peter Lynch's book. He talks about that's where I got the
Oh
idea
yeah.
from.
Mm.
It's basically a one-page summary. Which, when you go, by the way, fast forward to today, and my Cliff Note Substack, my Cap Investing Cliff Notes, that's where that inspiration came from. Like writing these smaller pieces,
Mm.
and the small cap earnings monitor I'm doing with Sebastian. These are really small kind of real early looks at companies.
Mm-hmm.
Um, so that's really I would use that a lot. So and I like tell a story, but the first stock I bought in real life was a stock that I bought in a contest before I came to college, and I lost all my money. So it went bankrupt.
Oh
But it came out of bankruptcy,
yeah.
and it was actually the first stock I bought. And I went in the value line to help kind of understand
Mm-hmm.
that story. 2-3 years later. Uh, so that's basically my kind of how I got started in it. And I was first going to be a stockbroker, and then I worked for at the time it was Dean Witter back then, a company
Mm-hmm.
called Dean Witter, and I forgot how that progression went through mergers and then the recession and stuff. Somebody bought them. Um, I don't know if it was Bear Stearns or I can't remember who the merger was
Mm-hmm.
with, but my cousin had a friend who worked there, Dave Viola, and my cousin Basson has passed away. Rest in
Mm-hmm.
peace. Um, uh, but he did this great thing and introduced me to his best friend at the time, and I was like, this is just cold calling all day,
Yeah.
calling, selling stuff that I don't even believe. I don't even know what I'm just trying to get
Mm.
leads for him. Reading a script. This is not fun. So I would get through that really quick,
Mm.
right? And then I was pretty bad at it, by the way. And I would use whatever I had time left to go read all their research stuff. They had it was called a Cotron.
Mm-hmm.
That was their Bloomberg terminal as Cotrons,
Ah yeah.
and really, really not fun to navigate. But they also had Value Line, and they had Standard and Poor tear sheets.
Mm.
I would use those. And then I started overextending my privilege, going on the weekends and just spending 5 hours there with all the programs.
Yeah.
So and doing my research, I was learning this other side I didn't see in the classroom, and I started using that just to really,
Reality, in other words.
yeah, sure, reality and
Because I mean, a lot of
yeah,
the theories, they are very much
yeah.
so assuming things.
And the interview on companies, I do a lot of that today. That came from Peter Lynch's book and understanding that you need to do that. So that's basically the kind of early cultivation
Mm.
of what happened. I remember, and I kind of got lucky. You'll hear the war stories about I started investing and lost all my money, or I lost everything in the
Mm.
first investment. Um, I'm lucky enough that didn't happen to me, uh, but I wasn't taking like huge bets either. I was even back then more diversified, so
Yeah.
I didn't have to put myself in a situation. But I remember winning big a few times. So the first stock I bought was
Mm.
STK Storage Technologies, which was actually off cloud. It was a tape storage, like storage on discs and physical discs and tapes. They call them tape libraries,
Mm-hmm.
which, by the way, is a new trend coming back into play today. Um, and I made 60% of my money on that. It was like, okay, wow. So I didn't get this, and I think that a lot of people will say, well, what's if you lose, you lose money a lot, you learn a lot, but I really try and get a win,
Mm-hmm.
because the earlier you can get that win, the more confident thing I can build. Because one of the worst things in investing that really challenges you to succeed sometimes is to work through adversity.
Yeah, and that
And when
human psychology as well, right? With
yeah,
because you
when
can
you
have
move
the
it,
skills but not be very confident in it, so it can
mhm.
affect your abilities to execute on your ideas.
Yeah, when you lose money, you might be tepid again. And like I still haven't covered fully from 2008.
Mm.
Some of the effects of '08, which was a horrible, correction for me. And I'm slowly shedding all those battle scars,
Yeah.
but they're still there. And
Mm.
but losing money teaches you lessons also for sure.
Yeah.
But I was lucky enough to have some nice early wins to see that it works
Mm.
and get really confident. As long as you don't want to get overconfident, which I've done many times in my career, and where it's punished me very badly, including in '08 being too invested and on a margin.
Mm.
Um, but that's kind of like was my so I had success and I started really learning about small companies. Surprisingly, when I started investing, I wasn't investing in nano caps or microcaps.
So like
Maybe
small caps, mid
maybe
caps.
mids and smalls, really, yeah.
Mm.
Um, my dad was mainly the same way, but once in a while he would come up with this weird company I never heard of. Like, who is this company? And he goes, Artistic Greetings? Yeah. Okay, well, this is it's like that, but a lot smaller. And actually, I think went to work for a company when I was in college.
Mm.
That was a company my dad bought, and I went to work for them just to do a little pure Lynch investigation
Mm.
on the floor there. And it was a greeting card. They didn't do so hot.
Yeah.
It was fun just thinking I was a young Lynch doing that.
Mm.
Um, I used to also at the time go to the Philadelphia Stock Exchange. I was born in Michigan but raised in the suburbs of Philadelphia,
Mm.
and I used to go to um, these investor meetings at the Philadelphia Stock Exchange, or I think it was the American Stock Exchange
Mm.
with throw, and they would do it in Philly. And I used to go there, and it would be like a company, a CEO would just be there pitching their story. Today's version of a virtual pitch, and it was
Yeah.
usually this
I mean,
analyst
that's
or
what you do nowadays as well, right? You do the interviews with the CEOs and everything.
yeah. And with that time, it was like it was basically a presentation without a slide,
Mm.
and it was all like analysts, seasoned investors. I was probably the youngest kid in the audience, and a suit that was too big for me. I remember that came out, and then one of my most successful investments came out of going to one of those. So I
Mm.
learned, wow, get this like inside baseball. I left. I was W. It was wireless telecom. WTT was a symbol.
Mm.
They recently got acquired, and they had one multi-bagger move, and I was lucky just to be there when it happened. It
Yeah.
was a horrible investment since then. I tried to go back in it because for nostalgia, I lost money in it.
Yeah.
But I remember coming out of that meeting, calling my then partner, and remember this is back in what was it, 92ish, right?
Mm.
And say, hey, we got to buy this stock on a payphone, and then back then you had to, like when you had to buy through a broker, you could buy on
Mm.
the online version, which is the phone. You get the phones and the
Yeah.
numbers, and hopefully you got the right symbol and you got the right shares. And that was fun. And then moving through the career and started geo investing.
Mm.
Um, I had this email list of people I was emailing my kind of research to. It was all bullet points. It was the one paragraph or 3 or 4 sentence pitch, 5 reasons I liked it, the risks, 5 reasons I didn't like it, or maybe the risks were there, and then the evaluation assessment,
Mm.
and that list grew over time. So I decided, let's just build have a little bit of community out of it. And so when we launched Geo, in the first, I think the founding is either 2007 or 8, but we wrote our first article in '09, like right after the recession.
Yeah.
And then it was really thought of as I didn't think of it as a business. I thought about, let's just build this thing and just start meeting other investors. I was very isolated
Mm.
investor. I had my thing, I was doing, I had my partner, but I really was not in a
I mean, it's
community.
in a way for you because you list out the things, you do the analysis on paper, and the benefit is you get to share with people, right? So, but you
I
also
love that.
profit from the process because you recollect the thoughts, right? You get an overview of what you think and actually get an assessment out of it, right? Rather than just thoughts in your head, right? So
Exactly, and remember, by the time I was doing it, there wasn't really like it was American. There wasn't really an online community really. Yeah,
yeah.
it started coming in after. So you remember American Online? It was Prodigy back then. So I wasn't. If I obviously if I was drafting it today, of course I would be all over social, right?
Yeah.
And the one thing too that I was very cognizant of is I didn't want to read too many books.
Mm.
I didn't want too much outside influence. And once I saw it worked, I zoned out on Pure Lynch. That was the first book I read for several years. I just did not want to get distracted, and I didn't. I was kind of a um, unpleasant person to talk to, probably a young naive kid. I didn't want to hear anything because I didn't want to get like I don't want to know. I just want to stay in my zone here. I was at that time I was very a one track investor,
Mm.
combining momentum with fundamentals that were on in GARP kind of stocks, and it was just working so well. I didn't want to
So
go
what? So
outside of
what
it.
changed that? Like, was it like how I mean, you were already going down this path. Like, what sort of brought you from it? What made you change or sort of realize, perhaps?
I built my own tool internally to start tracking all these stocks that would come through to me,
Mm.
right? And I started actually now kind of studying those kind of stocks or going through momentum
Mm.
and maybe started looking at stocks that weren't obvious undervalued. When I had a formula and it was in a stock and had this was quality, had
Yeah.
undervalued, I would buy. And then I started looking at all the years later. When '08, when we had the crash in '08, actually was a big part of a leap I made.
Mm.
Um, it gave me a chance to just reflect back in life on my whole journey of investing. And I started looking at all these stocks I passed by, I sold too early, and I think, wow, I did really well short term returns,
Mm.
but I put a lot of I could have probably been more efficient with I could have made a lot more money, or maybe the same amount of money with less effort
Mm.
having the ability to try and get the ability to go outside my comfort zone, and that's when I started experimenting with other things, and I realized I don't got to be an expert in any of it. I just have to get to a certain level of comfortability where I could take an investment. And then I really, what, I should start talking to people, really start
Mm.
building the community. And there's going to be a bunch of people who just know way more than me in this and will always will. And I started, so wow, this is brilliant analysis, and you really know what you're talking about. I really want to understand this more. So I just started crawling outside it. And then, of course, I'm a diversified investor to some degree. So I realized that it wasn't going to, doing this experiment, I wasn't going to blow my portfolio up because I am still diversified. So having these small little pods of different strategies working would be okay. Now I do still get concentrated in stocks I like,
Mm.
but I get concentrated through diversification, and so I don't want you to think I have these really small positions of that I don't care about.
Yeah.
And I think that's a misconception too. People think you hear people say, "Oh, if you're a diversified investor, you're just a lucky investor, or you don't know anything, you don't have conviction." You can have different levels of conviction.
Mm.
And I wanted, if I actually physically own one share in that company versus you on my watch list, I just approach it differently. I don't know if it's for me. That's how I do it psychologically, but I'm just looking at it differently. I'm seeing the story develop over time. Um, and there's a stock I recently bought 2 months ago that I had
Mm.
on my list for maybe 7 years
Yeah.
that I never bought. And I just happened to go by and look at it, and I saw it. And now that I bought, now that I bought it, I'm paying attention more. I'm
Yeah,
seeing, okay,
because like it can be on your watch list, but you can forget about it.
I wish I would have owned one. I wish I would have owned it because I would have got it at like a lot sooner probably.
Mm.
I would have had like a little bit of it. Um, and part of the tools, by the way, I'm building. We talked about that too. I'm building some tools to help our subscriber base at Geo and the Cliff Notes and colleagues start tracking their watch lists and their pipeline a little more efficiently
Mm.
to catch these earlier. But I'm just like I love just information, just finding it, reading it, consuming it, um, and I just love it so much. That's part
Yeah.
of it. Just the reason I want to. I don't want to be bored this game ever. And if I can find ways to make it more
Yeah.
exciting, I'll keep doing it.
Yeah. And one part. I do all these interviews, right? I talk with people, you get an idea of things, and you obviously also interview management. I mean, I will have also one interview coming up in that regard. But like when you interview these, let's say management, how do you get sort of a feel of wherever this is, perhaps a CEO who you would say has a little bit more to it than, let's say, one who might be a promoter or a storyteller, something where you think, okay, this could, that's a management that I would trust, so to speak.
Yeah, I get that question. That's been the toughest one for me to answer, Lucas. I probably
Mm,
answered different over time because of my experience.
yeah.
It is like I think putting that aside for a second, what's really important is how do you increase your odds of becoming a better investor?
Mm,
Let's talk about that first. Um, so you have your universe of stocks. Maybe it's 20,000. I haven't done the count recently, but the 20,000 in North America. Maybe half of those are microcaps. Probably if you go up to small cap, it's higher. So you have a lot of stocks to look through. How do you dwindle those? That if you're going to be a nano cap investor like I am, how do you dwindle that down to a lot less to the ones that give you a higher probability of making some money here,
yeah.
right? So can you get your process down to a fact where you're going to be 70% right? That's part of, so if that successfully you can do that, like in the Cliff Note index that we built on the Substack, which has I think has 137 stocks in it right now. But that index, by the
Hmm.
way, tracks a portion of my pipeline, personal pipeline. That's basically was part of the pipeline that populates geo investing. Also, it's mainly the GARP-ish high probability turnaround of my pipeline. We run them through quality factors loosely if they're going there. They don't have to meet them, but
Hmm.
they go in there, and as they're hitting multi-bagger factors, we put them in the index.
Hmm.
And and when I first started doing the index in February 22, I wasn't interviewing the companies. I was just quickly, just going over them, putting the stories down. If I liked them, writing the story down, writing the reason I like it, reason I don't like it, real quick bullets, and add it to the index. Very quick assessment, right? That's
So
how
just
and
all quantitative, no, not a lot of
it was
sort of.
I would say it's more qualitative.
Hmm.
I was reading when I say multi-bagger factors, they're very qualitative factors.
Hmm.
I probably shouldn't call them factors, but I've been interviewing a lot of quants lately, so I'm
Yeah.
using that all the time. So, getting more revenue from your customers,
Hmm.
operating leverage, just
Yeah.
a new industry trend that transforms a company. Data centers are basically transforming industrial companies into these growth companies. So we identified like our 10 top ones. That's a
Hmm.
lot of that's narrative. When that's hitting and matching with the quality factors, which are a combination of um, numbers and like of course sales, earnings, balance sheet health, these things,
Hmm.
outstanding share count, capital structure, basically, and management. You get some quality kind of things in there. So once we've used that, they go in the index. So and I wanted to understand, if I'm not interviewing management teams, how will this thing really work?
Yeah.
Eventually, I would interview as time goes through. I'll pick one from the index I like, and I'll call the team. But I don't want the interaction with the management to influence going in here. And I'll tell you why in a second.
Hmm.
And so this it's been a great experience. So 70% of the stocks had a positive outcome at some point. Maybe now it's less than that. Your multi-bagger hit rate, almost 50% of stocks have basically reached a multi-bagger status.
Yeah.
The numbers are showing that if you reduce your universe to the right universe, you're increasing your odds. So once I've done that, so whatever direction I go, whatever strategy I'm using, whatever additional process I want to use on top of what I just did, I've kind of handicapped myself a little bit. So when you ask me about interviewing a CEO, okay, well, I know if I'm picking from this group of stocks,
Yeah.
my odds are probably better than I'm not going to get a fraud CEO,
Mm.
because I don't want, or one who's going to lie to me or
Yeah.
intentionally
Yeah.
deceive me,
Yeah. Exactly.
and that's important, right? And then, okay, now you have to assess: do you believe what he's telling you is, or she is telling you, is does it make sense? Is it hitting all the things I've learned in life investing,
Yeah.
is it connecting with all these multi-bagger factors and things so okay that come in contact with. Okay, that makes you feel a little more comfortable. Whether they are successful or not doing it, right,
Yeah.
is another thing. And
Execution
that's
risk.
where, right. So that comes down to the pool I'm in.
Mm.
So if I'm in this pool of stocks that has a 70% hit rate, I think there's a higher probability what they're doing is going to work.
Mm.
So, but when you look at when I am talking to a company though, there's a few things I want to understand right like in the conversation. Really, I think it's like three things. What is your attitude towards capital structure? I'm a big believer of that, and I think a lot of others are. And you'll see a lot. You'll see a lot on Twitter now. Dilution. Can you
Yeah.
protect your capital structure? If it's broken, can you fix it without fix it one or two times and that's it? This can't be a 10-year project.
Mm.
If when I hear a company telling me, well, I don't have to raise money, but I want to put a shelf out there just in case the stock goes up. I don't want to hear that. I
Yeah.
hate when I hear that.
Yeah.
I understand why they're doing it, but there are many that don't do that, and there's a time and place to do it. If you own more of that, so if you have a high insider ownership, that CEO probably will think more about diluting the ownership, right?
Yeah.
Quality of management, obviously, how do you assess quality of management? I use
we could have a whole interview about that, right?
Yeah. You can get a really good sense of that by reading earnings calls. By the way, there are a lot of CEOs are very articulate when you talk to them, and they obviously know their business. You're trying to really grade them on that a little bit, and maybe you've done now you have AI. You can do your own homework before the interview to really understand if they're BSing you or they understand what's going on.
Yeah.
Competitive. You hear when you ask them a question, you go, "Oh, really? I didn't know that." Then you got a problem. You get that blank look. So you can ask tougher questions now because diving deeper into that.
Yeah.
So I would really. So one more thing I would do is to really prepare for your interview. It's really important. Read your filings, read the press releases, read the scripts, and make sure they're not contradicting anything that was said in there. I actually had talked to a CEO years ago who actually didn't understand where margins were going, even though they had talked about it in the 10K. He explained it a totally different way on a phone call. So that's important. I want to definitely uniquely understand what challenges they've faced in the past and how they fixed them. My feeling is if they've hopefully faced it one time and fix it, they won't face it again.
Yeah.
Or
you at least know that they might stick to their business and try to really work through it. Maybe have a little bit more skin to it than maybe a paid CEO or whatever.
For sure, skin in the game and really stuck it out and been there for a long time. Maybe actually bought stock in the bad times. That's important. So that's really important. I like CEOs that really understand the sales and marketing piece of the puzzle, because that's where a lot of companies fail. We all know the story. Great product, bad sales process, and so that's really important to me. And you'll see a lot of companies that eventually multi-bag kind of fix that piece of the puzzle. And a lot of times in smaller company land, and the marketing strategy is very challenged. You're small. How do you scale? You can't hire a big sales staff. So you're seeing it more and more now. Channel partners. Can these companies really understand how to utilize channel partners and make that work? And that's real. So I'd like to understand that piece of strategy. And I was talking to one company not too long ago, who profitable, selling near cash, penny stock, really nice, no debt, low share count. Has regulatory tailwinds for the company now moving forward. They do some testing for cosmetic companies to make sure that the products you're making are not going to be irritate the skin or the eyes, basically.
Yeah.
So and now you have a lot of, and it's a basically non-animal technique they're doing,
Mm-hmm.
which is very topical now, and it's being promoted that a lot right now. That type of testing. So, but I asked them, well, who's your sales team?
Yeah.
Well, it's only me. Okay. It's been around for a long time.
Yeah.
This company, it survived,
Mm.
and I asked, well, why do you hire a sales team? Well, if I hire somebody, it might be like a 2-year payback. 18, well,
Mm.
I mean, for them, they should make the investment because they have the cash.
Yeah.
So I don't know they don't. But for some, they might not have that. They don't just not have the cash to do that. Right? They got to raise money to do it. How they do it. So these sacrifices. So I want to understand these channel partners. Now they are trying to now. He did tell me they have a channel partner strategy, and they're trying to really grow through those partnerships. It was good to hear that.
Mm-hmm.
So dilution, quality of management, and really cap structure. You take a look at those, that little bucket there. It's really
So
important.
those are
Everything
your
around
3 pillars, you can say.
it's a 10-point quality list.
Yeah.
But I would say if you had to draw like a line, that would be okay. Management.
Mm-hmm.
I would say, and of course, I like finding these companies that have been around for a long, long time that are reinventing themselves. And that has this this management team that's been around for a little bit and proven they can succeed, or at least maintain something. Of course, you can get those situations where you have a management team that's been around for a long time that has to leave, right?
Yeah.
But at least they have if they're profitable, been around, have a market, have customers, they have something to work with. So when a new team comes in potentially, or maybe from within the company, they got something really tangible to play with. So I like that. I think playing there, you could play it all day long, and not leave it your whole career and do really well. Monster Beverage would have been in that bucket, by the way. So then you take a look at the second piece of management is I like companies that a management team that is not as concerned about the stock price, wants to run the business, and they want to do these pump and dump campaigns. And I understand IR matters. To some, as an investor, you want to make your money quicker.
Yeah. And you don't want to be in the dark.
Yeah. Stock goes up higher for the company, they can raise money at higher prices.
Yeah.
So I understand but it's a fine line between running your company to succeed or running your price to succeed. Running your company to do well versus get acquired. Just mindset. You just run the company to grow a little bit every day and make the right moves, and that's going to benefit the company, the employees, and the shareholders. That's important to me. And then you take those two and you draw a line right to number 9 and 10 in that bucket in that quality list. It's a company that doesn't have to really raise money to grow, just to survive, and it's been very diligent about that throughout their time. And you can judge that a little bit by looking at their outstanding share count. If you have a lot of shares,
that's usually a good indicator. Or the growth of it, right?
Sure, the growth of it. That maybe it's a good business, but a bad allocator of capital. But you can make exceptions, of course. So if it's a new team coming in that's inherited a bad capital structure, and they're there to fix it, you can give some pause there.
Yeah.
And one thing I want to touch upon, because insider ownership is part of this 10 list, and there's a lot of talk you'll see on Twitter sometimes about insider ownership not being a predictor of returns.
Yeah.
Okay. Well, to me, it's not the point. The point is, I would like to know that because there's a lot of factors besides insider buying that are going to affect the ability of the company to go up. And a company, when an insider buys stock, he might be buying it for 10 years from now. So how do you even measure that? Is an interesting thing here. You should measure points in time, actually. But I want to understand that because he owns stock or she owns stock, that they're going to treat capital structure a little more important than someone who doesn't. And that to me is why I look at insider ownership. I don't buy a stock because an insider is buying it. Now, there's particular points in time where you want to look at that. So if the company maybe is going down because of bad earnings and the insider's buying there, interesting clue. If an insider's buying when the stock's going in the near its highs, interesting.
Yeah.
But I really see them when they're buying at stress points. So if there's a really stress point in the company, like a turnaround situation going on, and they got to raise some money, that they're part of the investment.
Yeah.
That they're doing it. That's some of the times I like that, actually. And I bet you if you went, that'd be a curious study to do, actually, to see in those situations in an offering where management is participating in the offering, how is the return on that stock at different time frames.
Yeah.
Uh,
I mean, there or perhaps they also give loans to the company when it's rough. Like there's various ways where you can see
yeah.
that management is trying to support the company even while it's rough. And you also mentioned sort of the SEC filings, right? Sort of, and when you look at those, and what is something that is a specific red or green flag? Is that also then comes back again to capital structure, as you already mentioned, or is there something perhaps also that is very important when you go through these documents?
Yeah, it's important to go through them, and it's not my first line of
Yeah, usually you
research.
first narrow it down to
So,
the basket and then, right?
yeah, because going with the SEC filing and even using AI, I mean, I think the press release and the earnings call transcripts are, and I don't think enough investors use them, use them enough, but I think that's the best place to start getting idea flow, really,
Mm,
even over screens, because press releases and scripts, you can read narrative and how they say things. Um, Combine that with quantitative analysis is a really interesting thing to discuss some other time. But with SEC filings, if I gotten to that point, and there are, um, if we're just looking for like red flag, I'm not talking about opportunity, I'm looking for red flags, green
yeah,
flags. Like, what do I like this? So I'm usually looking at the SEC filing for the red flags right away. Like if I like the stock at some point here, and that I found it, now I need to start validating or invalidating that
mm,
stock is something I want to take a look at. So if we go to the SEC filing, I'm going right, as you would imagine, to anything that would, any section that talks about capital allocation or having to raise money.
yeah,
So that there's a section, was it capital liquidity section, liquidity and capital section, I think that's what it's called.
mm,
In that section of the SEC document, it'll tell you, okay, I'll discuss the balance sheet, the cash statement, if they may have to raise capital. Some companies will always say, will give you the boilerplate thing where it's, okay, well, um, everything's good.
yeah,
We don't think we have to raise money in the next 12 months. Um, but of course, we can if we want to make an acquisition or if our business plan
yeah,
fails. Some may be stronger and say, hey, for the foreseeable future, I love the when I see those ones. But some will say we have to raise money now.
yeah,
So, okay. And then when I do see those ones that have to raise money, I might, if I still like it, I might wonder if, well, is that an interesting thing maybe to
mm,
fund
mm,
personally? Do they need funding? So I'm going right there. Um, then I'm looking at the management discussion analysis section, management discussion
mm,
analysis, MD&A, MD&A, and sometimes you'll find nuggets in there, which basically talks about each line item: sales,
yeah,
gross margins, expenses, and see if there's anything in there that's different than what was in the press release or the call.
mhm,
And that's there. I love the ones that really the 10Ks. I'm really talking. I do most of my research in 10Ks
yeah,
first before there's more information in 10K about a company than 10Q. I'd love to see when I see a company spend time explaining the industry in their 10K.
mm,
And especially these small firms don't have to. And like, why are you
yeah,
doing this? Why is,
yeah,
why is Mike Hollywood 2 million in revenue or 1 million in revenue a quarter taking the time to do that? So I like to see that
yeah,
and a lot. So of course you want to look at the dilutive securities because
mm,
that affects. So you're looking at warrants, options, convertible debt, convertible preferred stock, and I'm always calculating a worst case scenario.
mhm,
I don't. Yeah, I want to know what EPS looks like or any valuation what I'm using based on shares, based on a worst case fully diluted situation. Yeah, and so I'm always looking at that too. So you have Class A, Class B shares. You got to look at all these things. The capital structure is really important, as you can.
yeah.
That basically flows
Yeah,
from
that's
the.
that's also much more an issue, you can say, for the US listed stocks compared to the Canadian ones, where the structure is usually much more simplified in a lot of
For
instances.
sure. Yeah.
Yeah,
There's a cool little section in filings called subsequent events,
yeah,
and it's the SEC filings, and it has information that's in that. There could be information in there that was not that
mm,
came out between the press release or between the end of the quarter and the filing of the Q or the K. So sometimes you'll find some info arb in there,
Mm-hmm.
some information that was hidden in there that was not in the press release. It's very unlikely you will, but sometimes you'll find a contract that's sitting in there, and it's called subsequent events.
Yeah.
So events that occurred after I think the quarter was over, but by the time the filing was filed, I believe
Yeah.
that's what that means.
Mm. And
But it's a growing thing, man. Look, you just keep reading and reading these filings. It's not cookie cutter.
yeah.
I was looking for clues in these filings about profitability, um, internal controls. Really important. That's a red flag. You want to make sure that they have good, proper internal controls to basically identify fraud. And there's a section in the 10Ks and I think Qs about internal control. Because you want to be able to trust the financial statements. That's important. Customer concentration, looking for that too. A lot of the filing should have a segment on customer concentration, so you can look at that over time. That's important.
Yeah. And, well, AI has sort of appeared in the last, since 2020, right? And it's really changing how to look for new opportunities, how to analyze things, right? It's certainly speeding up the process and making it, in a lot of ways, you can say, more. It saves you time, right? And
Sure.
how can and it is also really disrupting the industries, right? We saw the SaaS sell-off, right, which was more sentiment driven, if you ask me. And how would you say is this sort of changing these boring companies, you can say, the industrials, the ones that are usually not exciting until they are at one point, right?
Yeah. Well, I think you can look at AI from two points of views. First of all, some of these companies are going to be able to get better margins by using AI themselves and just internally,
Yeah.
and saving costs. So that's going to be, maybe organize the sales process, document, organization process, these things. So if a company can figure out how to utilize AI to save expenses, get more leads, blah blah, that's one piece of it. But on the other piece of it now, so is actually the growth piece of it. How can companies start using AI now to grow?
And save resources, right? It's much more. A lot of these small companies have such a big resource constraint, right? I can imagine that this can help in a lot of ways.
Yeah, resources, but freeing up. So if AI is saving you money in some place now, you can go free that resource up and maybe put into growth. But more importantly, is it opening up new markets for the company? So if I'm a software company, I'm trying to think of myself, okay, well, is there any way I can now use software to accelerate what I'm doing now or adopt this platform for AI? When you take a look at industrial companies, HVAC and heating, cooling companies, are finding ways to basically get involved in the, power constraint piece of the puzzle for data centers.
Or cooling also, PPIH, right? Permapipe, for example.
Yeah, Permapipe with the leak detection of pipes.
Yeah.
A stock I own, by the way. TSI was doing integration. I own a little bit of that right now. TGEN, another stock I own, does cooling.
Yeah, that was
solution.
Ticogen. I don't know her.
Ticogen.
Yeah, Ticogen. Yeah.
Yeah. On it goes on and on. You're seeing a lot of these stocks get transformed. There's one ACFN. I own that one. They do remote monitoring. They just have a partnership with a company now that allows them to get into remote monitoring, maybe data centers, critical infrastructure. MG Meritas Group is another, they do on-site kind of inspections for companies, critical assets, but now they're expanding into data centers and doing more software remote monitoring. So it's on and on. I got to talk on and on. These all boring construction companies now are getting involved in helping to build data centers. Bird Construction out of Canada, which I own a little bit of, actually builds data centers. BIRDF is the symbol in the US. I think it's BDT in Canada. On and on. And what I think is going to happen, Lucas, to a lot of these boring companies, there used to be maybe they have real low PEs.
Yeah.
And now you might see the switch to okay, well, maybe they will have growth PEs for the next 5 years. I don't know. So
we've certainly seen it for the whole industry that the multiples have expanded for for these cyclicals. I mean, that's also partly driven because of sentiment, right? But
Sure, and you have to understand like when to get out of it.
yeah,
You know, the whole question now is how long is this going to last? This revolution,
yeah,
this capex rebuild, and we don't know if it's gonna like if you're betting it's 1 or 2 years, and now it's 10 years later, you're still complaining. That's what it's
yeah.
about. So I prefer to be in it, making bets
Mm,
in it to some degree, and
mhm,
that's where I do a lot of smaller bets until really until I gain
mhm.
conviction, really understand something.
Mhm. And would you say for the investors out there that are more to the investment process, do you think that it helps in sort of discovering that you often talk about information arbitrage, right? With AI driven sentiment analysis and so on. Like, do you think there's still a window for or rather an opportunity in regards to that, or do you think that this is narrowing over time?
I don't think it's narrowing. I don't I the As a matter of fact, it might be getting better.
Yeah.
I'll tell you why. Because the there's I think if you look at small cap or even nano cap investing today,
Mhm.
there's so many challenges against it. It's so some brokerage firms don't let you buy these stocks unless you call them in, maybe
Yeah.
email them in. I've even been part of some institutional platforms that you got to email the order in for an OTC company.
Yeah.
Then you have the dark stocks. You have the rule 211 or 211C or whatever that happened in 2022, which allows companies to go dark. Um, you have just 2008 demolished the whole sentiment. So you have a
Mhm.
lot of things going on, making it harder. Making you would think reducing the pool of investors
Mhm.
in this thing, right? And so that's good. So that means you still have less competition. Although since 2020, you have more people, young kids actually
Yeah,
getting
and
involved.
Substack.
That's what I was saying. It was
Yeah,
nice to see. So if you're good at finding information early, they're going to eventually find it.
yeah,
It's like a good thing,
yeah.
right? But remember, there's 10,000 small microcap stocks, Lucas. Right? I don't
Mhm.
think you're ever going to give that opportunity. And the thing is too is there's information that is just everywhere now, so it's disaggregated. So the
Mhm.
opportunity to find that information that's hiding somewhere.
Mhm.
And it's from my experience right now of reading earnings call transcripts and press releases. I haven't seen them and these really nano cap companies. There's even information in the filings where people aren't looking all the time. You're still finding you have a great time arbitrage. It's not like it's happening overnight.
Yeah.
So I haven't seen that be a problem yet.
Mhm.
Because look about it, think about it.
And
If there's an InfoArb piece of
mhm.
information sitting in an earnings call transcript, there's different levels of InfoArb. There's one that's tradable. I'll give you an example. So if a company comes out with a press release,
Mhm.
um, the quarter looks bad or missed estimates, stock goes down 20-30%. But on the call, they talk about, well, it was because of a delayed order.
Yeah.
It's going to hit next quarter. You go buy a stock, or you can act fast.
Yeah.
You'll have that kind of probably re-rate quickly, but you want to act without maybe additional information. And it works best if you know that company a little bit, so
Mhm.
you have at least a little bit of background to be okay. So that's the kind of K that over time maybe that gets somewhat arbitraged out as long if people want to employ that in masses. But then you're
Mhm.
gonna the second you go down to the next bucket. It's like okay, there's information in there that talks about okay, like Tecogen when it was like 65, 70 cents 2 years ago, they started talking about data centers. They weren't talking about it in their press release. It was one small comment in an earnings call. You're not going to go
Yeah.
buy a stock because of that comment.
Yeah.
Oh, okay, they mentioned it. They want to get involved in it, but you want to do your research. So you're going to have this time arbitrage there to start doing digging. Okay, does it make sense that Tecogen should be in this industry?
Mhm.
And that's going to take time to flesh out. So you did these different levels of information across. The more research that information needs, the more time it's going to take to flush out.
Mhm.
But at least it's a clue to get you going.
Yeah. And also to get to the point of finding these baskets of stocks that actually fit the criteria, like what are some things when you screen or look out for and familiarize with what you're looking out for? Like, what are some things that are for you perhaps non-negotiables, things that you constrain your search down, right, so to speak?
Yes, I think a match is kind of that 10-point list. Like if you've had a history of issuing stock over time, if you just put a shelf out there for the heck of it,
Mm.
and these are the small red flags. There's this if you've been spinning a narrative for 10 years and it's still the same narrative,
Yeah.
I'm going to put you aside. And I think that's where a lot of young investors can get kind of hurt. And because I got hurt there all the time. You have these kind of companies. You have the ones you just totally don't look good, losing a ton of money, bad
But
cap structure.
the management is talking something up.
Yeah.
Or perhaps
Talking
management
about,
is delusional as well. that exists too.
talking about $1 billion opportunities when you have $1 in revenue.
Yeah.
So, what if I get a 1% TAM or that TAM? These kind of things. If they have always failing, and there's certain industries I won't invest in, but we can talk about that later. So, but really, I'm really looking at the history of a company and how it's kind of evolved over time, and have they kind of delivered on what they said they were going to deliver. So, but that's why it's really important. I tell everyone, if you're going to be an investor, start doing it, journaling it right away. So 20 years from now, you have that experience. So you have the ones that are really, really bad, that they just look obvious. Ton of money, not profitable, bad plan, and you just tell by reading the narrative, very little revenue, maybe even a lot of revenue, losing a lot of money, whatever. You've kind of written that off. You look at the estimates out there by analysts; they still have them losing money for the next 3 years. The guidance is bad, so that's just not looking good. That's the ones you just instinctively know. Then you have the ones that look just fantastic. The ones that are just undervalued, or if they're not undervalued, they're at least meeting these requirements we talked about: multi-bagger list, the quality list. And then you have the ones in the middle. They're right on that line. They have then maybe not profitable yet, but they look kind of real, right?
The gray area.
They're legitimate, right? They just never get it right.
Yeah.
And as a young, I bought a lot of those when I was younger. A lot of those are kind of story stocks. You can't say, but still legit. Like they got great technology, but can't execute. That was what we talked earlier.
Yeah.
You might have stuff, but you got a team that's unwilling to expand, unwilling to sell, doesn't know what to do. Could be a lifestyle CEO just taking the salary. And that's really, really tough. And those are the ones that are hardest to avoid, I think. And how do you avoid those is by, when you get in that bucket of those stocks have been around for 20, 30, 40, 50 years, they tend to leave less of them be there. And so if the company's younger and not been around a long time, I usually treat that with a little less, even if they're doing well revenue wise, or even if they're profitable. I still teach. They haven't really proven anything yet.
Yeah.
So I get a little worried there. And the reason I like those ones that have been around for a long time is they still have a little bit of that old school value of long term matters, maximization shareholder value. These things. Investors are short term now too than ever. So companies a lot of times might have to think they have to placate to that short termism, and might run the business the wrong way. But yeah, I don't think that's an experience you just accumulate over time. It's not like a checklist to go over. Do I avoid that? There are obviously right?
Yeah.
But you get
the quick ones you experience the fastest.
Yeah. Like for example, there's one company I won't put the symbol out there because people get mad at me. But I mean, when the CEO has great tech in satellite industry. I met the CEO 2016. Heard the same story then. Nothing has progressed except the story's gotten better. Still losing money, and then he blames the dwindling cash position on a bad crypto investment, the money they made with cash. I mean, I
Yeah.
don't care what you come back from on that ever to me.
Yeah.
All right, I'm not buying your stock. And then you're raising money like every freaking day.
Yeah.
They've literally raised money 3 times within, I think, like a month and a half.
Mm.
And they're still doing it. They're still raising money. So yeah, so it's just behavior.
Mm. Yeah, but those
Um,
are sort of those are perhaps the ones with the best like the best story, just like story wise they have a good narrative and everything, but it never
yeah,
comes to that point. It's just like
yeah.
uh
And
but
you learn to see these small tells, Lucas, when you're interviewing a team, management, or talking to them, the body language, the eyes, how they move, you start recognizing all of it. Like I was this one.
yeah.
I asked him, "When do you?" He just looked. I asked about profitability or something. He just like looked away. Like it was a weird. I guess tell it wasn't gonna. It's never gonna happen.
Not so enthusiastic.
It's like you see, he was saying yes but nodding no. But you
Yeah,
didn't know it.
yeah, yeah,
So,
exactly.
yeah.
Yeah,
But
and
experience, get experience as much as you can to
yeah,
learn these tells, to learn what's important.
yeah, and you were also early in sort of identifying these US listed China frauds, right? So what did these companies sort of have in common? Like, what are some of the pump and dump schemes, and perhaps something that is still being done, right?
Yeah, well, I've been out of as you might have seen, I was doing short selling for a period of
Yeah.
time between 2010 and maybe 15, 16, 14, and a lot of that was in U.S. listed Chinese reverse mergers.
Mhm.
Um, and the one common thing there, they all look cheap. They're too cheap. P's of fives,
Yeah.
real value gaps, and they were just all lying. And
Mm.
the thing with them, they had the SEC filings here signed off by auditors and the legal. But when you could access the numbers in China, you could
Mhm.
actually there were at that time you could access filings. They were off, told a whole different story. And we just put on the ground. We had an on the ground team taking film and everything,
Mhm.
counting trucks. So that was a little more sophisticated. You look at the pump and dumps with the with on the U.S. side that were here. So when I got into the China game in 2000, late 2009, mid 2010,
Mhm.
now I started being okay. Well, let me look at these pump and dumps. Let me take a look at those guys a little bit because those stocks years ago I would buy.
Mhm.
Like when I first I got caught in that pump and dump scheme
Who
for a
who
while.
who didn't once, at
Yeah,
one point
of
in
course.
time,
You get
right?
the alert story. I'm
Yeah.
just glad I got out of my system quickly.
Yeah.
Uh, so let me revisit this stuff, and it was all with the OTC. It was OTC game, and it
Mm.
was the blueprint was easy. Um, get a patent, get technology, buy it for stock or small dollars.
Hopefully break through new industry, right?
Yeah, yeah, and $1 billion industry, and not only it's cheaper to run a pump and dump campaign to make money
Yeah.
than it is to actually build a business. So you use that right, and you raise money, maybe pay yourself, who knows? But that was really and some of these were very sophisticated though,
Mm.
uh, frauds in terms of how far they would go to really make you believe that the tech was real, and that it was going to work. There was some people that actually had some pump and dumps would have product on the shelf somewhere, like in a CVS or Walgreens. I'm like, how'd that get there? I have no way to make anything. So yeah, but that so then it was like do that, pump it on, and these were pumping the OTC.
Mm.
They weren't listed, but I think it's harder to do that these days. So
Mhm.
now the pump and dump game has kind of graduated more to the Nasdaq and um, regular exchanges, and they haven't been able to control it. Um, I haven't been in the game a lot, so I don't think I see the pump and dumps happening as much on the
Mm.
OTC anymore.
Well,
Why
they
would you go
certainly
there?
don't show up on the screener, right?
No. It's liquid. You can do them now on Nasdaq and be liquid doing it.
Yeah.
So so why even like bother?
Yeah.
And so that's the way I look at it. But yeah, I wish I could have it. It's just I think it's to some degree it's gotten worse. Like,
Mm.
so when we were first doing the fraud investigation in China, at least because China's gotten worse or still here, it was easy. It was all these really industrial companies who would count trucks,
Yeah.
film things. Now it's like a lot of it became tech stuff. It was hard to
Mm.
validate it. App downloads, these things. And now it's come back to, they don't care. It's just any kind of company here. I mean, it's back to what it used to be
Yeah.
in China. And they said it's not even only tech companies doing it again. But you have a playground now. This is the most important thing about it, I think. You have a
Mm.
playground now where when I was doing it during that sweet spot,
Yeah.
2010 to 14, the regulators cared about it. When you say cared, I said it with a concern. They would halt the stock and delist it,
Yeah.
and it would go to zero. Now they let markets take care of it a little more.
Mm.
So if you're short,
I mean, if you're in that in the small cap space, you already have to. Everything falls on you.
you get squeezed really bad on
Yeah.
a short squeeze. So the game has changed a little bit. So
Mm.
I just don't like it anymore. I liked it back then because it was really about exposing fraud. They were 100% fraud. It wasn't a trading game. It wasn't a day trading game
Mm.
where you just going in there to short a stock, read a report and cover, right?
Mm.
I feel it's changed that way today. And actually, when you get into the shorting mindset,
Yeah.
you become a different person. I'm pleasant to be around, and always pissed off at the world, and so
Yeah.
I didn't like it. And then it was hurting although it opened up my eyes to a lot of schemes that are used, which helps me in my long research looking
Mm.
at companies. I didn't like the human being aspect of what was making me.
Yeah.
So, or,
Negative
or
all day.
I want to basically build assets to help people build wealth over time.
Yeah.
Uh, and protect. I do want
Mm.
to protect them. So I'm okay with like the identifying red flags, risk factors, and letting people know about them and stuff like that. That's fine.
Mm.
No, I still believe that's important. I call it now. We call it the portfolio protection.
Yeah.
And so if we come across stuff, so I do create a zombie index,
Mm.
which is stocks where I think are all going to go to zero one day, which I haven't put out there yet, but we do have it. So I still am interested in kind of like seeing it all transpire.
Yeah.
And
Yeah.
I like that the less of those that are there, the better for us that are investing in better companies. And the money's got to go somewhere.
Yeah.
So more money.
Exactly. The limited pool of money.
Yeah, yeah,
Yeah.
yeah.
And we're sort of coming to the end of our interview. Is there something perhaps you want to mention to the audience? Anything sort of?
Yeah, look, I'd like to say that I'm having a lot of fun still doing this
Mm.
investing for over 3 decades now, and I don't want to ever stop doing it. So I'm
Well,
having
you
fun.
already poured 3 decades in, so I mean there must be something to it, right?
I got no choice. It's my retire. But I enjoy what I do. I enjoy building the web geo investing. I've enjoyed the Cliff Note Substack, and now the next evolution here. I'm really enjoying doing more networking, building
Mm.
community, and now building tools to help investors in the smaller cap world really gain an edge and stuff. And now with AI here, we can do that a lot better and smoother. So
Mm.
I think you'll see a lot more of that coming from what I'm doing and my goals and stuff. And from messaging to young investors, I like to always say I love really doing things and building assets and for the everyday investor.
Mm.
Even though I have institutional clients and stuff, but I think it's important part. It's important to have that part of the ecosystem for the small cap world in place and working. It inspires this idea discovery, networking, and it helps the space. And I just encourage younger kids, women, and men, get involved in this game early. Start experiencing success, losses, journal everything. And you're living in a world now, right now, a time where you have access to so many ways to do research, and so many ways to invest, where it doesn't have to be scary like you might
Yeah.
think people might think it is. And if you lose, who cares? You come back. Just keep refining that process.
Yeah.
Don't read too many books. You read your first two or three, stick with that for a while. I know Warren Buffett said read, 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 read. I understand that, but don't overload yourself either.
Mm.
You know,
Yeah.
find something, connect with it, get good at it, and then start expanding from there.
Mm.
And interact with other investors as much as you can. I didn't do enough of that when I was younger.
Yeah.
You would do that and get exposure. And think about the stock market as a way to have fun, but building one piece to building wealth.
Mm.
Stocks aren't everything. Make sure that everything around you is done right. Your personal life, so that when you have the right balance sheet outside your investing world. So
That's
that
quite the way to put it.
yeah, yeah. You got to pay taxes. You got rainy days. You got 2008s,
Yeah.
and I had to go back in my life. I did a decent job at that,
Mm.
but not if I would when I outlined when I was young what I wanted to do and how I was going to be successful. Hopefully, the vision. I had certain things I had to check off, and I did a lot of them right, but some really really bad.
Yeah.
Yes, and I think that manage that life. Don't go. Don't be careful on margin. Be careful on debt in your personal life. Um, and when you're making money, that's great, but don't get cocky. When you're
Yeah.
losing money, don't give up. That's important.
Mhm.
But make sure when you're losing money when stocks going down and you have money to deploy, it's just if you can think about that way, and that would I think if I did that personally, I probably would have had less CAGR, right?
Mhm.
Less, but I would have had more consistency, and the drawdowns would have been less dramatic for me and less hurtful, right? So
Mhm.
I think even though I've done well, I would have probably done better. And I just had a skull session with Carlos Morales. He's a quant investor.
Mhm.
And I have a Substack called Skull Sessions. Lucas, we are talking about that, and it's where I interview investors, and I've done it for a long time.
Yeah. Yeah.
I'm putting it there, right? And he said something about the way his approach to investing was, managing risk to maximize returns, basically.
Yeah.
Because if you can make all this money but big drawdowns, you're starting all over again, and that's an important thing to understand,
Yeah.
I think. So leave it at that. And it's right, and it's very hard in the world we're living in today. You see success everywhere, even though it's not real. You
Mhm.
see it on Instagram, you see it on Twitter, you see it everywhere, and it's just natural to get caught up in that sometimes, and then make decisions based on chasing that and making the
Yeah.
wrong decision. So
Yeah.
I think that's it for now, and I hope I look forward to talking to you in the future, man.
Yeah. Well, I really appreciate the opportunity to get to ask you these questions and get a better understanding of how it is to be in all these markets and what to look out for. I mean, everybody has their own individual experience, right? And that's why we all get together and share, right?
For sure, for
Yeah.
sure. And just anything you want to talk, let me know. I love talking stocks and chatting about these things. So
Yeah.
I'm really glad to see young investors like yourself get
Mhm.
involved in this market, and it's really inspiring to others. I think inspiring to me to keep going.
Yeah.
Reminds me of my views. So keep it up, Lucas.
Yeah. I
And
appreciate
great.
the
By
kind
the
words.
way, great questions. Great questions. By the
Yeah,
way.
thank you. Really, really appreciate the feedback and yeah, again, right?